On a bipartisan bill. Joining us from Capitol Hill is Democratic Senator Mark Warner of Virginia. He's also been working on this issue with Senator Corker. Welcome, sir. It's a pleasure to have you here.
Thanks for having me on today.
I know that you have high hopes for this as you undertake getting financial reform back on track. What issues will you be tackling first? Because as we've been reporting, I know you were putting some rather controversial issues in this particular scenario towards the end of the negotiating process. What will you want to tackle first?
Well, Bob Corker and I have been working literally for months together on resolution authority, on systemic risk, on making sure that we never have to expose the taxpayer and that we could perhaps expunge from the American vocabulary too big to fail. So trying to put in place an ability for a preference towards bankruptcy, trying to make sure that we've got the appropriate speed bumps in place for those systemically risky institutions. And we're about 98% of the way done with our sections of the bill. And Senator Dodd has said that he will take those sections and they will be incorporated into the product he puts together. There's still been some concerns around consumer protection and how we make sure we have enhanced consumer protection, but that we don't have that unduly interfere with the basic safety and soundness prudential regulation. And I think there's a way to sort through that. And as I said from the beginning, so
that's not a deal breaker? You don't think that remains the deal breaker?
I think that's been one that's been a little bit thorny, but I think reasonable people can find a way to enhance consumer protection and still make sure that safety and soundness is the sole responsibility and major responsibility of prudential regulators. There is a way through this, and I'm glad that we're going to end up with a bipartisan bill here, because at the end of the day, we're 18 months after AIG and Lehman. This is an area it's too important to fail. So we've got to make sure we've got to get a bill here.
So you and Senator Corker, you say, are about 98% of the way there on too big to fail, let's call it. Where does the Volcker rule fit in any of this, and is it a part of this bill at all?
Well, listen, I think I have enormous respect for Chairman Volcker. I think he raised an important point that needs to be considered. The challenge is when you start talking, as you guys know, about proprietary trading, private equity, which used to be my business for 20 years before I got in politics, hedge funds. There's definitional issues here. So I think there's a recognition that within normal prudential regulation for these large financial firms, you need to take a special look at their proprietary trading activities, their private equity activities, making sure that we don't commingle too many of those functions. But to have an outright ban, that gets to be a much more challenging proposition.
That sounds like it's a no, that it's not contained in this particular.
I think listen, for my part, it's still under discussion, but I think there's ways, again, that we can get this issue that Chairman Volcker has addressed, get it into the mix, but there are clearly problems in terms of, where you put the definitions in these areas, and can you do it within the existing prudential regulatory structure.
Is your view one that is shared by most of your colleagues on the Democratic side, on the committee?
I know that I've been spending most of my time actually with Senator Corker over the last couple of months as we kind of sort through our areas, and we've obviously gotten into some of these other areas at the discussion basis. But I think you even saw at the hearing the other day with Chairman Volcker, a lot of respect for him, raising this issue, but some real questions about how you would actually write legislation that would draw bright lines. I mean, making a market in a stock versus proprietary trading, it's a challenge to draw a bright line there.
Let me come back, if I might, to the question of consumer protection.
Sure.
This has been a sort of a key thing. I described it earlier as potentially the sort of public option in this bill, an area of great contention. How far are Democrats willing to compromise on that, specifically with respect to that area that Senator Shelby was most concerned about, which was the writing of rules?
Well, listen, I can only speak for myself on this issue. I do think it's important that you've got a way to resolve challenges between consumer protection and safety and soundness. I could live with this being within a single agency. I also think it's important, as I hear from the regulated half of the banking industry, we want to make sure that the non-regulated half, where a lot of these problems emerged in the first place, particularly in the mortgage lending area, that the rulemaking is going to apply both to the regulated half and to the non-regulated half. Now, when you get into the questions of enforcement and who enforces those rules, that's where there's still going to be some ongoing debate. But again, I think there's a way to get to yes if we all agree that, this is too important to kind of let fall into the partisan trap that so many other important
Yes.
pieces of legislation have fallen into.
Well, if you're 98% of the way there, when you get to 100%, please, we hope you'll join us here
Well,
first
I'm only
on
saying
Power Lunch.
98% around systemic risk, too big to fail, and the questions about resolution. There's other areas we've got to work through, but I think if you can, if you can check your DNR hats at the door and say, how do we make sure we don't mess up the financial system, but put some new rules in the road into place, I think we can get there.
Thank you, Senator, very much for joining us. We appreciate it.
Thank you.
Coming up next on Power Lunch, we take a trip beyond the big caps with Matt Nesto.